Accounting standard. Today, in this session, we are going to complete the fourth chapter. That is, the fourth chapter is the reporting of assets, liabilities, and disclosures in the financial statements using the relevant Indian accounting standard. Okay, so we will see in this fourth chapter the reporting of the assets. That is for the long-term assets, short-term assets. For short-term assets, we use, that is Indian accounting. The guidance is given in the Indian accounting standard 2, that is for the inventories. Then for the long term assets, Indian accounting standard 16, that is the property, plant and equipment, that is PPE. That is for the short term, we can say. Then for the liabilities, we use Indian accounting standard 23 for borrowing cost. Then in 36, Indian accounting standard 36, we study the impairment of assets. That is the difference between the carrying value and the recoverable value, that is the from the market. Next one is, we see the in the last sessions, we understand the Indian accounting standard 38, that is how we show the different intangible assets into the financial statements. Okay, how their costings, their value, how we minus the amortizations. Okay, so all this part we completed in the last session. Okay. Next one is the employee benefit. In Indian accounting standard 19, we understand the different employee benefits. Okay, we know that employee gets the salary or the wages in exchange of their services to the company. Okay, also the employee gets some other benefits like the provident funds. Okay, some of the other benefits like the paid leave, sick leaves. Okay, so these are how that benefits companies providing to the different employees, how they make the entries into the financial statements. Okay, so that part we finished in the last session. So in this session, so we are going to understand the Indian accounting standard 33, that is for the earning per share, and next one is the Indian accounting standard 108, that is for operating segments. So first, we are going to understand, that is Indian Accounting Standard 33, that is for earning per share. Now, first, we understand what is mean by that earning per share. Okay, how the earning per share calculates in the any organizations. Okay, first of all, we that as a business student, we everyone knows that the every company, every organization doing the business to generate the revenue, to generate the profit. Okay, I as an investor, if I invest in any organization, in any company, in hope of that company is generating the good revenue or the good profit. Okay, whenever the company is generating the profit, okay, that means the company's revenue is we can say is more than the expenses. Okay, when we minus the revenue minus expenses, then we get the profit for that organizations. Okay, so in income statement, actually we call that is revenue minus cost of goods sold, then we get the mm, gross profit. Okay, when we can say when we minus the operating expenses from that gross profit, then we get the operating profit. Okay, when we minus the interest and taxes from that operating profit, then we get the net profit. So net profit is that profit that is, we can say, that is the income of the all the owners of the company, all the owners of the organizations. Then who is the owner? The shareholders of the organization. Okay, who invest their hard earned money in the company. Now the generated profit is equally distributed among the different shareholders in the form of, we can say, in the form of dividend. Okay, so that we called as that dividend, we called as the that earning per share. That means how we can say the company is generating the profit for each share. That's how we calculate the you can say earning per share. How we calculate the earning per share? That is the net profit divided by number of shares of that company into the public domain. Okay, so if we calculate like this, then we get the earning per share. For example, if we take that the net profit of the organization is, we can say, the 10 lakhs, and the shares of the organizations they sold to the different shareholders is 1 lakh, then 10 lakh divided by 1 lakh, then the earning per share is equal to 10 rupees. That means that each share earns 10 rupees for their shareholders. If suppose I possess, we can say, the 100 shares of that company, then each share gives me the 10 rupees earning. So my total earning is 100 into 10 is equal to 1000. So if as a shareholder, as an investor, if I purchase the 100 share, then at the end of the financial year, that company gives me the 1000 rupees. Okay, so all this, how this earning per shares we show in the financial statements. So regarding this, the guidelines is provided under the Indian Accounting Standard 33. Okay, so the Indian Accounting Standard 33 governs the calculation and, we can say, the presentation of earning per share, providing standardized methods for measuring the profitability on the we can say per share basis. Okay, so why EPS matters? Okay, so why EPS is, we can say, is important from the investor's point of view. Okay, uh, also EPS we called as the, that is the investor lens. That means the investors always have their eyes or lenses on the earning per share. Okay, so the earning per share, we can say, it is the key profitability indicator that shows that how much return the each and every shares gives to their investors. Okay, so it is one of the most, we can say, a profitability indicator, most important profitability indicator. Okay, by analyzing the earning per share, we can conclude that the company is profitable or non-profitable. If the earning per share is good, then we can call that the we can say the shareholders getting the continuous earning on their each and every shares. That statement we can make by analyzing the earning per share. Okay, so EPS is the key profitability indicator. That means that the EPS serves as the fundamental metric that investor use to assess the company's performance, that company is generating profit or company is in a loss. Okay, so that we can conclude from the EPS, that is how the each and every shares earn for their shareholders, that is nothing but the EPS. Okay, and compare the investment opportunities across the different entities and sector. Okay, so if we that means we compare the investment opportunities. Okay, if you got to know that in pharmaceutical company, the earning per share is more, and in automobile sector earning per share is less, that means the investment opportunity in pharmaceutical industry is more, because in this year we get the EPS, that is the each share gives us the more earning as compared to the automobile company. So this is how, by we can say, by analyzing the EPS of the different companies, by analyze we can say by comparing the EPS of the different companies, we can explore the different opportunity options. Okay, investor can explore the investment options to made his portfolio. Okay, so EPS is one of, we can say, one of the most important indicator from the investor point of view. It is the, we can say, a key profitable indicator. Next one is, we can say, a dual EPS presentation. Okay, so Indian Accounting Standard 33 mandates the presentation of both basic and diluted EPS for listed companies, providing the complete picture of the earning potential. Okay, so first we need to understand what is mean by that two terms, that is the basic EPS and the diluted EPS. Okay, first guys, you need to understand, when company issue, we can say, we take the example of, that is company earns 10 lakh rupees and the shares of that company in market is 1 lakh. Okay, so when we divide the 10 lakh divided by 1 lakh, we get the value of 10 rupees. That is earning per share value is a 10 rupees. So this is the basic EPS. Okay, but we know that the sum of the bonds or some of the financial securities sale by the companies. Okay, we see in the we can say in the securities analysis and portfolio management one term, that is the equity related bonds. Okay, so in that we see that bonds are convertible into the equity shares after a maturity. Okay, so some of the financial securities, some of the options, some of the bonds. Okay, so it may convert into the equity shares after the maturity. Okay, if we can say in this year, if you say that is the some of the bonds gets mature, now the investor wants to convert their bonds, their equity related bonds into the equity. Okay, now the number of shares increased from the 1 lakh to a plus 50,000 share is increased because of the diluted share. That means some of the securities gets diluted into the share form, into the stocks. Okay, so now my total profit in the organization is same, that is a 10 lakh rupees, but my number of share gets increases from 1 lakh to 1 lakh 50,000 because of that increase, because of that increased diluted shares. Okay, we convert some equity related bonds, okay, some options into the stocks, into the equity. Okay, now my earning per share gets decreases because of this diluted shares. That is the 10 lakh divided by if just a second, we do the calculations on calculator. If I calculate 10 lakh, just a second, 10 lakh divided by 1,50,000. Okay. Now my earning per share is 6.66. Initially, in the basic EPS, okay, when the sum of the financial securities not diluted into the equity, at that time my earning per share is 10 lakh divided by 1 lakh. So my earning per share is RS 10 rupees. But because of the diluted security, diluted bonds, my shares or stocks increase. So my profit is same. So 10 lakh divided by 1 lakh 50,000, our EPS earning per share is 6.66 lakhs. Okay. So how we show this basic EPS and diluted EPS into the financial statements. Okay, so that both the basic EPS and diluted EPS must be we can say shown into the different financial statements. Okay, financial statements like the in profit and loss account, that is income statements, or we can say the cash flow statement, balance sheets. So in this statement both these should be there. Next one is the enhanced comparative comparability. Okay, so the consistent EPS reporting, the calculation of the EPS at the end of the every financial year, that enhance the comparability. Okay, so we can compare the two or more organizations with the help of EPS, and based upon that we can conclude their financial performance, that which company is performing well financially and which is not. Okay, so basic EPS calculation, that is core calculation, that is we calculate the net profit. How we calculate the net profit? That is revenue minus cost of goods sold. We get the operating profit minus operating expenses. We get the operating profit minus interest and tax. We get the net profit. Okay, so with this we can say start with the profit attributable to ordinary shareholders, excluding dividends on preference shares and other non-ordinary equity items. Okay, we know that from the net profit, first we pay the taxes and income, then we pay the dividends of the preference shares, and then we calculate the earning per shares. Okay, first we determine the weighted average shares. That means the number of shares which company sells into the market, and according to then we apply the formula of the EPS, that is the profit, net profit divided by number of shares. Okay, here the formula is given: basic EPS is equal to profit attributable to ordinary shareholders divided by weighted average number of ordinary shares outstanding. Okay, so that means the net profit divided by number of shares. This is the simple formula for EPS. Okay. So next one is the diluted EPS. Okay, I already told you that what is the diluted EPS. We know that the value of earning per share gets decreases because of the dilution of some of the financial securities. That is, we can say those financial securities which convertible into the equity shares, like the equity related bonds, some options. Okay, when we convert that directly into the stocks, into the equity, the number of outstanding shares sold by the company gets increases, and because of this, the earning per shares value gets decreases. So impact assessment. So what is the impact of the diluted EPS is? That reflects the hypothetical impact if all the diluted instruments such as options, warrants, we can say the convertible securities, that means the equity related bonds which we can directly convert it into the shares, into the equity shares, all were exercised or converted. Okay, so what is the dual adjustment? They exist both numerator earning, that is the earning is, we can say, the net profit divided by number of shares. Okay, we need to adjust the number of shares in the denominator, and then we calculate the earning per share. So the value we get is the decreased value as compared to the basic earning per shares. Okay, here if we take the real time, real world example, that is one company is their net profit is 3.5 million. Million means 3.5, 35 lakhs. Okay, so net profit is 3.5 million, that is a 35 lakhs, that is a company's profit, that is the company's net profit, and their outstanding share is the 500k, that means 5 lakhs. Okay, so when we calculate the basic EPS, that is the 35 lakhs divided by 5 lakhs, then we get the basic EPS is the 7 rupees. That means each and every shares gives the 7 rupees earning to their shareholders. Okay, so how much share any shareholder holds, on that basis their earning depends. If they hold the more share, their earning is more. If they hold the less shares, then their holding is less. Okay, if I hold the 1000 shares, then my earning is 1000 into 7 is equal to 7000 rupees. Okay, so this is how we calculate the basic EPS. Now, because of the convertible securities, the 45k, that means 45,000 equity shares gets increases because of the dilution of that marketable security into the shares, equity shares. Okay, now the outstanding share is 5 lakh plus 45,000 is equal to 5 lakh 45,000. When we calculate the diluted EPS, then diluted EPS का formula क्या आएगा? 35 lakhs divided by 5 lakhs 45k, then we get the diluted EPS is the 6.42 rupees. That means the value initially is the 7 rupees. Now, because of that increased 45,000 equity shares, now the value of the diluted share gets decreases, that is the 6.42. So what the Indian Accounting Standard 33 tells us that all these things should be clearly mentioned into the financial statements. That is the basic EPS, diluted EPS, that is how much financial securities converted into the equity shares. Okay, what is the basic EPS, what is the diluted EPS? Okay, so that the reader or the who is the stockholders who, we can say, analyze the financial statements, have a clarity that company is earning how much profit, that how much the each share gives the earning to their owners, to their shareholders. Okay, so this is, we can say, a basic motto behind the Indian Accounting Standard 33. Okay, so I will show you the document of Indian Accounting Standard 33. I also share the document in the chat box. Okay, so you can read the document of Indian Accounting Standard 33. Okay, just a second. I will share first the document with you in a chat box. So I share. I think you all get the document of Indian Accounting Standard 33. That is the earning per share. Okay, so whenever you guys have a time, please read the document. Now I am going to share the screen with you for the Indian Accounting Standard 33. That is the earning per shares declaration into the financial statements. Okay, yes. If you read the objective of the Indian Accounting Standard 33, just a second. Okay, so the objective of the standard is to prescribe the principle for the determination and presentation of earning per shares as to improve the performance comparisons between the different entities, means different companies in the same reporting period, between the different reporting periods for the same entity. That means we calculate we determine the EPS and the presentation of earning per share for what? For the comparison of two different companies, or the comparison of same company for the different times, for the different financial years. Okay, so from that we can conclude that the company's performance is increase, financially increase or decrease. Or when we compare the two companies, then we compare that the which company is performing well. Okay. Next one is, we can say, uh, even though earnings per share data have limitations because of the different accounting policies that may be used for determining earnings, a consistently determined denominator enhances the financial reporting. The focus of this standard is on the denominator of the earning per shares calculation. That means we know that the more focus of this Indian Accounting Standard 33 is on the denominator. That means the formula we study, that is EPS is equal to net profit divided by number of shares. Okay. So actually, the Indian Accounting Standard 33 more emphasis on the denominator, that is the number of shares. Okay, how number of share of any particular company, how it changes. Okay, when the convertible securities, we can say, convert into the equity shares, into the ordinary stocks. Okay, so how that impact the value of EPS? Okay, the basic EPS and the diluted EPS. So that we are going to understand. That is the main objective of the Indian Accounting Standard 33. So these Indian accounting standards shall apply to companies that have issued ordinary shares to which the Indian accounting standard notified under the Companies Act. Okay, so here the scope is given: the entity disclose the earning per share shall calculate and disclose the earning per share in accordance with this standard. Okay, so it is mandatory to shares share, we can say, disclose the earning per share and their calculation, and we can say the disclosure of the earning per share in accordance with the Indian Accounting Standard 33. Okay, so this is the scope. If you see, some of the definition is given here. That is what is meant by dilution, what is meant by anti-dilution. If you see the definition of dilution, given here. Uh, First we read the dilution definition, then anti-dilution. So dilution is the reduction in earning per share or increase in a losses per share. That means when the number of share gets decreases because of the conversion of the financial securities. So dilution in the reduction in the earning per shares. Okay, or we can say the increase in losses per share resulting from the assumption that convertible instruments are converted. That means some of the bond instruments, some of the option instrument, warrant instruments that we converted after the maturity period, that converted into the, we can say, ordinary shares. And because of that increased number, the value of the number of shares gets increases. That means the denominator in the formula EPS is equal to net profit divided by number of share. That's because of the dilution, the reduction in the earning per share. What is mean by anti-dilution? Anti-dilution is the reverse of that. That means we convert the shares into the other financial instrument like the bonds, warrants, options. So anti-dilution is increase in earning per share or reduction in the losses per share resulting from the assumption that convertible instruments are we can say that convertible instrument are converted, that options or warrants are exercised. Okay, when the companies buy back the shares, okay, at that time we see that anti dilution, we can say, when the companies buy back the shares. Okay, so here are some of the here the definition is given: option, warrants and their equivalents are financial instrument that gives the holder the right to purchase the ordinary shares. Okay, those we can say investor who possess the options, warrants, okay, or the equity related bonds, that financial instrument gives them a right. They can convert because they are the convertible instruments, financial instrument. We can convert that instruments into the after the maturity date into the ordinary equity shares. Okay, so here some of the definitions are given to us. Okay, so here the measurement is given, that how we measure the earning per share and put into the different financial statements. For this, here the guideline is given. That is, the entity shall calculate the basic earning per share amount for the profit or loss attributable to ordinary equity holders of of a parent entity, and if presented profit or loss from the accounting operations attributable to those equity holders. Okay, so basic earning per share shall be calculated by dividing the profit or loss attributable to ordinary equity holders of the amount. So here the basic formula is given to us. Okay, so if you read, that is what is meant by earning. Okay, so earnings definition is given here. That is, for the purpose of calculating the basic earning per share, the amount attributable to ordinary equity holders of the parents, profit or loss from counting the operations attributable to the parent entity. The profit, and that is the profit we calculate, that is the net profit. Okay, here uh, okay, here see, if you see in the point number 14, that how we minus first the tax, that is after the tax amount of the preference dividend, that is deducted from the profit and loss, and then we take that net profit for the calculation of the earning per share. Okay, here that part is given. Okay, here the what is meant by shares, the definition of shares and the number of shares, how we calculate, that part is given here. That is, for the purpose of the calculating the basic earning per share, the number of ordinary shares shall be weighted average number of ordinary shares into the market. Okay, so for all this part, here the guidelines is given in the Indian Accounting Standard 33. If you read here, that is the diluted earning per share. What is mean by that? How any company can calculate that in the financial statements. So for that, the guidelines is given here in the Indian Accounting Standard 33. That is, an entity shall calculate the diluted earning per share amounts for the profit or loss attributable to ordinary equity holders of the parent entity if presented profit or loss from the counting operations. Okay, I already told you how we calculate the diluted earning per shares. Okay, What is meant by earning? So for all these, we can say the guidelines. That means whenever we think of the earning per shares into the financial statements, so first we need to read that Indian Accounting Standard 33. Okay. So okay, so I share already with you guys the Indian Accounting Standard 33, that PDF with you. Please download that PDF, and whenever you have a time, please read that PDF so you can thoroughly understand the concept of how we disclose the earning per share into the financial statements. Okay, now next EPS is the Indian Accounting Standard, is that is the Indian Accounting Standard 108. So that we are going to understand. Just a second, I share the screen with you. Yes, so here that is now next Indian Accounting Standard is, that is the Indian Accounting Standard 108. That is the operating segment. That is, we know that when in the multinational companies, in a big corporate houses, that the company works in the different segments. Okay, so how we disclose the different segments into the financial statements? So for this part, the guideline is given by the Indian Accounting Standard to the companies. Okay, so whenever the big corporate houses, when they disclose their different operating segment, first they need to refer the Indian Accounting Standard 108, and then only they can further can say proceed. Okay, for example, if we take what is meant by first the operating segment. Okay, so operating segment is that segment, we can say by doing that operations, that company generate a certain revenue. Okay, then only that segment we called as the operating segment. Otherwise, we don't call it as the operating segment. For example, we can say if the any company is having a manufacturing plant, let's say for example, if we take the Tata is one of the prestigious group. Okay, they work in the different segments, like they have the Tata Motors, they have a TCS. Okay, okay, so we can say they have this different we can say companies. We can say they have some brand for watch. Okay, so the numerous companies that they are having. So for that, each segment that generates a revenue or profit for the Tata Group, so all that segment we called as the we can say operating segment for a Tata Group. Okay, if there is a central office, or we can say the corporate office of a Tata Group. Okay, but they are doing only administrative part. Okay, so no, we can say revenue is generated from that corporate office. Then we cannot consider that corporate office as a operating segment. So operating segment is that segment of the company that generates the revenue for the organizations. Okay, then how company can show the different segments separately into the financial statements. So because we know that the every segment has some costing, every segment has a different we can say a different expenses, expenditures, revenue, profit, different cash flows. Okay, so the company need to disclose each and every sector separately, and each and every sector's financial transaction, financial position separately. Okay, so for that purpose, the guideline is given by the Indian Accounting Standard 108. Okay, we can say what is the mm, management approach as per the Indian Accounting Standard 108. So that requires the entities to report the financial information by operating segment exactly as used by the internal management for decision making purposes. Okay, that means the company need to provide the we can say the financial information by each and every segment separately. For what? For the use by the internal management, to use of the CEOs, to the use of the managing director, to use of we can say one of the chief financial officers. Okay, for the decision making purposes. Okay, they know from the financial statements whenever they have the separate financial information. Okay, so they can analyze that which segment is performing well financially, okay, which segment is in a loss, so they can take some such a steps, so they can reduce the losses or they can increase the profit. Okay, so this is why for the management purpose the disclosure of this operating segments into the financial statement is must needed. Okay, so that replace the previous standard. So we can say previously that each segment is not separately we can say disclosed into the financial statements. Okay, so management approach the replaces the previous risk and return approach under Indian Accounting Standard 17, providing the more relevant segment informations. Okay, so next one is we can say the CODM framework. Who is that CODM? CODM is a chief operating decision maker. That means we know that the CEO, that is the chief or executive officer, is the head of the any company who takes the major decision in the organization in the company. Okay, related to business, related to production, related to finance, marketing, operations, analytics. Okay, so all this decision is taken by this chief operating decision maker. We can say a CEO is in the place in a company. Okay, so that segment are identified based upon the internal reports regularly reviewed by. Okay, so each and every segment is actually reviewed by a CEO. He takes the continuous reporting from the each and every different segments which generates the revenue and the profit for the organizations. And then we can say, because we know that the CEO need to analyze the performance, he need to do the performance assessment, we can say performance assessment at each and at the end of the financial years. Then the CEO got to know that which segment is performing well and which segment is lacking behind. Okay, so if there we can say, for example, if we take there are the 10 segments, operating segment in the company, and we can say the 7 segments are doing financially well, but the 3 segments bearing a losses, then CEO can took some steps to reduce the losses in the that 3 operating segments, and they can also increase the profit of that other 7 we can say operating segment as well. So this is why the we can say the separate disclosure of the operating segment must be there into the financial statements. Okay, so identifying the operating segment. So how we identify the different segments for the organizations. Okay, for example, if we take the any car company. Okay, we know that how many segments for that car company. We can say that that is the car part segment. We know that there is a software in the car, so the software segment. Okay, motor vessel segments. We can say the electronics equipment segment. Okay, warehouse leasing operations finance segment. So these are the some of the types of segments in which the we can say the group of companies, or when the multinational corporations, multinational companies, okay, so this is how they work in the different segments, and they generates the revenue from these different segments. So what the Indian Accounting Standard 108 wants, the, the disclosure of financial information of each and every segment separately, so that we got to know that which segment is performing well uh, when we compare the different segments. Okay, so revenue generation. That is when we called any segment as an operating segment, when that segment gives the revenue to the company. Otherwise we don't call that process as a segment. Okay, so an operating segment is a component that earns a revenue and incurs expenses from the business activity. Okay, then and then only if these two things fulfill by the any, we can say, components or the process in the company, that the operating segment is a component that earns a revenue. That is the revenue earning and the expenses incurred. That two things is fulfilled by the any components. Then and then only we call that segment as a operating segment. Okay. Next one is the CODM review, that is the chief. Okay, the chief operating decision maker can take the review, that the segment must be regularly reviewed by the chief operating decision maker for resource allocation and the performance assessment. Okay, if the CODM doing the allocation and performance of assessment regularly, he review the that operating segment regularly. Okay, then and then only we call that segment as operating segment. Okay, so this is how we identify the segment. So here also one eligibility criteria is given to us. If the any specific segment is generating a revenue is more than 10%, then that segment we called as the we can say the operating segment. Here the, if you see the diagram, that is the quantitative threshold for reportable segment. Okay, the segment qualifies as a reportable if it meets the of any of these 10% threshold. Okay, so any segment that qualifies the following some criteria. Okay, then and then only it is qualify for the, it is qualify as a reportable into the financial statements, different financial statements. Okay, when first one is the revenue test. Okay, if the revenue, that is the, if the total revenue of the company is 100%, and that particular segment is giving a revenue is more than, we can say, a 10% from the 100%, that is the reported revenue external plus intersegment is more than the 10% of combined revenue of all segment, then we call, then that segment is qualify for the reporting. Next one is the profit and loss. If the reported profit and loss is greater than 10% of combine of all the profit and combined losses of all segment, then we also called it as the qualify for the reporting. Next one is the asset test. If the segment assets are more than the 10% of combined assets, then if any of the three tests is fulfilled by the segment, that is the revenue test or the profit oblique loss test or the asset test. If any of the test is qualified, then we call that segment as a we can say qualify for the reporting in the financial statements. Next one is which disclosure required by as per the Indian Accounting Standard 108. First one is the core financial measures. Okay, we can say for that particular segment, what is the revenue for that particular segment, then what is the profit and loss for that particular segment, their assets, liabilities, and the other relevant financial information as reported to the we can say CODM. Okay. Uh, Next one is the next one is, we can say, the reconciliation. That is the detailed reconciliation of segment revenue, profit, loss, assets, liabilities. All things should be there into the financial information. We can say into that financial under that under that operating segment. Okay, and the what additional information is needed, that is information about the products and services, geographical areas, major customers, when material to the entity. So all these things should be there into the as per the Indian Accounting Standard 108. Okay, next one is we can say what is the management approach towards the reporting of the different segments. And why it matters, that is the internal alignment that reflects the exactly how management review and operates the business internally. Okay, when we got to know by analyzing the segment, different segment information as per the Indian Accounting Standard 108, then we got to know that how management exactly review their internal system, they're in different segments, okay, their business internally, and provides the authentic insights into the organizational structure. Okay, then and then only we got to know what is the structure of the organization. Decision making clarity provides the users of the financial statements with insights perfectly aligned with the internal decision making processes and the resource allocation. How the CODM allocate the available resources into the different segments, and what is the decision making process internally. Okay, by analyzing the different segments, we know that which segment is performing, or we got to know the performance of the different segments. Okay, so on that basis, how the decision is taken by the management for the different segments. Okay, so here is one case study is given to us, that is the segment reporting in a diversified businesses. There we, if we take the, here is example, same example is given here, that is the Tata Group segment structure. We know that Tata is the one uh, corporate giant which works into the different segments, like the, we can say their steel division, IT services, automotive. Okay, so when they disclose their financial information, say disclose their information segment wise, the automotive segment, IT services segment, steel division segment. So then we got to know that which sector is there, each and every sector's financial performance, because that each and every sector gives the revenue to the Tata Group. That is the automobiles sector gives them the revenue continuously. The IT services, this we can say the steel division. Okay, so all the segments separately must be disclosed into their annual reports, into their financial statements. Then and then only as an investor that I got to know that which segment is performed well under the Tata Group. Okay, if I got to know that now IT services is doing well, then I can, we can say, revise my portfolio. I can taken out the my funds from the steel division and I can invest it into the IT services. So this is how the disclosure of the financial information for each and every segment is mandatory to the big corporate houses, to the multinational companies, to the giant corporations. Okay. So each segment's revenue, profit, and assets are disclosed separately. That is for the steel divisions, their revenue, what is the revenue of the steel division, what is their profit, what are their assets. Okay, they are must be disclosed separately. Same likewise for the IT services, what are their revenue, what is their profit, what are their different assets. So that disclosure separately must be there into the financial statements. Same about the you can say for the automobiles. Okay, so that separate reporting should be there into the financial statements. Okay, so here we finished both the we can say Indian accounting standard. So here in chat box I share with you the PDF of the Indian accounting standard 108. So here I share with you the PDF. Okay, and I show you the PDF here as well. Just a second. We have for 5 minutes. Okay, if you see on your screen now, you see the Indian Accounting Standard 108. It is the 11 pages PDF. In that, some of the guidelines is given how the company can disclose their financial information for each and every segment. What is the we can say what is the core principle. First, when the entity shall disclose the information to enable users of its financial statements to evaluate the nature and the financial effects of the business activities. We know that the financial giants, big corporate houses doing the different business activities. So for each and every business activities, for each and every segment, they has to disclose the financial information to the different stakeholders. Okay, in which it engaged and economic environment in which it operates. Like, what is the scope? The scope is also given here. These accounting standards are applied to the companies to which the Indian accounting standards notified. Okay, the entity has to entity that is not required to apply in this. Okay. So here, what is the operating segment? Okay. So operating segment's definition is given here. The operating segment is a component of an entity that engage in a business activity from which it may earn a revenue and incur the expenses. Okay, so that is the basic definition. Also, one another definition is given to us. That is the operating segment whose operating results are regularly reviewed by the entity's chief operating decision maker to make the decision about resources to be allocated to the segment and assess its performance. Okay. Also, the segment is a component of an entity for which the discrete financial information is available. Okay, so for if the any we can say a component of the organization is comes into these we can say the ABC part, then we call that component as the operating segment. Here the here in point number 6, the very important thing is given. Not every part of the entity is necessarily an operating segment. Okay, that is a big statement, guys. Listen carefully, that not every part of the entity, that means not every part of the company is necessarily an operating segment or part of the operating segment. For example, a corporate headquarters or some functional departments may not earn the revenue. Okay, I gave you the example of the administrative office of a Tata Group. Okay, same likewise, if the corporate headquarters or some functional departments may not be earn the revenue, if the department is not earning the revenue for the company, then we not considered it as a operating segment. Okay, so only we consider those department as a operating segment, those earns a revenue for the organization. Okay, so those incur the expenses for from the organizations. Okay, so the functional department may not earn a revenue, may not earn the revenues that are only incidental to the activities of the entity, would not be operating segment. For the purposes of this Indian accounting standard, and entities post-employment benefit plans are not operating segment. Okay, so these are the guidelines is given here with us. Okay, whenever you have a time, okay, so please read this document thoroughly so you can understand the Indian accounting standard 108, that is the operating segment. So here the chapter number 4 is we completed here. Okay, so we only left with the chapter number 5, that is the we can say the miscellaneous issues in a financial reporting. Okay, so it's a small chapter, we can finish in coming two sessions. Okay, so up to that we can say a Saturday, we finish the syllabus of this financial reporting subject. Okay, thank you guys. If you don't have any questions, then we can leave the sessions. Okay, students, you can leave the session and you can join the your next session.